Meanwhile, following all these developments here in a Dow that is just eked into positive territory, the read from market watchers John Layfield, Mark Matson, Washington Examiner, White House correspondent Sarah Westwood. Sarah, end with you, begin with you. No matter how you slice it, this has been, today notwithstanding, a very impressive rally, the strongest we've seen a year after the election of anyone, going back now to George Herbert Walker Bush. The gains are already better than those if they hold. And taking a stab right now to the gains that we had from 1932 to 1933 after FDR was elected, albeit from much lower and dicier levels. But what do you make of that, and whether this is Donald Trump inspired elsewhere? What do you think?
I think investor confidence has soared on both the promise of tax reform and the promise of deregulation from the Trump administration. And I do think President Trump deserves a lot of credit for that. Since the days of the campaign, he has laid out an aggressively pro-growth agenda that was focused really heavily on having a more aggressive and competitive corporate tax system, creating jobs, cutting red tape for businesses. And at least on the deregulation side, the Trump administration has really delivered. They've gone after deregulation a lot more aggressively than even past Republican administrations have. The tax reform piece, it'll be interesting to see if the prospects for that dim legislatively, whether the market responds, because a lot of that economic optimism has been attributed to the fact that the president has promised to bring the corporate tax rate down, to bring the repatriation tax rate down. If those things don't happen, it'll be interesting to see if the market responds to that. Yeah,
then we'll see, right, Mark Matson, if this is really inspired by tax cuts or the thought that they're coming and they don't come, or they're late in coming, then what?
Well, I think, look, this president, unlike our previous president, actually understands that the free market and entrepreneurs create jobs and economic growth, and not politicians. So because of that, he's kind of had, so far, it's kind of like do no harm, the Hippocratic Oath. Look, entrepreneurs will take us out of this, but it's not just here in the United States. It's a global phenomenon. International large stocks are up 20% year to date. Emerging market stocks are up 25% year to date. So it seems like a strong America is good for the whole world. Who knew? And that's about, this is the greatest country in the world and the greatest economic engine in the world, and still is. And if we can just get one or two of these little things like tax reform in, I think you could see a massive economic engine just go crazy. Art Laffer's on our economic board, and he said that's the single thing that could help promote this economy and global markets is tax cuts.
John, what do you think?
I think about 18 times earnings right now on the S&P. I think the market looks a little bit rich. If you get tax cuts, I think it's unreasonable to expect tax reform. We were promised tax reform, healthcare reform. That has not happened. I don't think tax reform is going to happen. It took years to happen in 1986. I think we could see some tax cuts and repatriation of money. I think that makes the market look cheap. When you talk about President Trump's, what he gets credit for, the first 2 months, the market had been flat for about 2 years previous. The only thing that changed was President Trump getting elected, and the market was up 8 to 10%. I think since then, it's been corporate earnings that are driving this market.
So that would imply, Sarah, that you don't need the tax cuts to keep this rally stable, or at least not reverse it.
Well, certainly we'll test that theory when we see towards the end of the year whether it's looking likely that the White House will stick to this timeline they've laid out, which is getting through the House by October, the Senate through November. That's pretty ambitious. And it's true that a tax overhaul of the code would be unrealistic. They might get some tax cuts through, and that would be isolating a variable, right? You would be able to tell then if tax cuts didn't go through how much of an effect that would have on the markets. Then you might be able to look back and say, well, tax cuts was driving this rally, or tax cuts was not a part of the bull market.
All right, guys, thank you all very much. Well, it's breaking news.